Hi everyone, I'm Ron Levin, and we're here to talk about an investor's guide to seed investing. So really, I'm here to help address questions, things you might be thinking about. But really, what we're here to talk about is, what if you could access the most interesting, high potential seed stage venture startups, just like an elite venture capitalist. But the trick is, how do you do it if you don't have lots and lots of insider connections? And how do you do it if maybe you don't have millions of dollars to invest as a traditional investor in many of the well-known venture capital funds that have very high requirements just to get access to the asset class? Alumni Ventures is here to make seed investing accessible at just a $10,000 minimum, and get you invested into a well-diversified venture portfolio alongside very well-established VCs, names like Andreessen Horowitz, Sequoia Capital, Kleiner Perkins, etc. Investing in seed stage startups obviously is done for returns, but it's more than that. It's about supporting visionary founders at the earliest stages and getting into groundbreaking innovations that could reshape entire industries, while also potentially generating outsized returns that only a field such as venture capital is able to deliver. So let me just note a couple of disclosures before we get started. We're speaking today about Alumni Ventures and our views of the associated investing landscape. This presentation is for informational purposes only and is not an offer to buy or sell securities, which are only made pursuant to the formal offering documents for the fund. So a little overview on what we'll talk about today. I'll give you some background on who we are at Alumni Ventures. We'll talk about seed investing generally, some of the basics of what is seed investing and why and how do we do it. How do we evaluate deals? What are our best practices for finding and selecting investments? And what's the hidden edge of Alumni Ventures? What are some of the risks? There's no free lunch in this world, so there are some risks that come with venture investing. And what are the trends? And I'll also share some stories from some of our founders, and then go into also some testimonials from a few of our investors. Well, I'll save time at the end. We have had a few questions submitted to us, and I'll cover a few of those by the end of this presentation as well. So a little bit on myself. I'm managing partner here at Alumni Ventures. We'll be coming up on 6 years here with the firm. I was actually previously an investor myself in Alumni Ventures through one of our funds, originally the Yard Ventures Fund, our fund that works with the Harvard alumni community. And then subsequently, I also invest in Castor Ventures, our MIT alumni fund, as I have some family connections there, and got more and more interested in what the firm was doing, and then came to work here in 2019. Currently, I lead our seed fund as well as our Super Angel and Scout program. So really the most actively invested member of our firm leading seed investments. Prior to Alumni Ventures, a graduate of Babson College, where I went to study entrepreneurship, have been fascinated with entrepreneurship and startups since I was a kid. I started my own business when I was just 11 years old that I ran all the way through college. So that what got me interested in entrepreneurship from an early age, and why I went to Babson, which was at the time a pioneer in entrepreneurial education and remains so today. Later went to receive my MBA at Harvard Business School. I began my career in the first .com wave around 2000 with Lycos, one of the pioneer search engine and web portals. There were many around. Some of you, depending on what generation you come from, may remember them alongside the Yahoos and InfoSeeks and Alta Vistas and a number of others kind of in that world before sort of Google came and consolidated and led that whole market. But I was there in early days working on the in-house M&A team, so got exposure to many digital brands very early on in my career. Later, I moved into consulting, sort of post-MBA. I joined McKinsey, where I got to do strategy consulting for a couple of years, focused heavily on the travel industry. My sort of two dual professional interests through much of my career have been aviation / travel, as well as digital and technology, of course. That's what led me into travel technology specifically. Went to Booking.com, which is arguably the global leader and most valuable company in the travel industry, broadly speaking. I spent a couple years there doing strategy and leading the new B2B division that they created of services that were sold and marketed to other hotel companies, where we were able to partner with brands from Marriott down to individual hotels and hospitality groups. That from there started feeling a little more entrepreneurial, wanted to come back to that and finally do a tech startup, as I'd sort of been hoping to do at some point in my career. Partnered with two folks that I'd met through my experience at Booking, and we started a company out of Barcelona called TravelPerk, which is an enterprise travel platform. We saw an opportunity from our collective experiences in travel technology to build a new platform for booking business travel. I left fairly early on in our journey. I was the founding CEO, raised our seed capital, hired our first employees, went through our first pivot. I left early, but the company has scaled quite dramatically since then. It is now most recently raised a Series E financing round. The latest valuation was at $2.7 billion. So while I don't personally claim credit for scaling the company, at least was there in the foundation where we identified the opportunity and put the initial tools in place to build a great company. As I've been investing here now at Alumni Ventures for close to 6 years, I've developed my own interests and passions. I love investing in companies that are creating societal change that will hopefully make the world a better place in one form or another. I blog about that, and I also published a book in late 2023 called Higher Purpose Venture Capital, which shares the stories of venture-backed startups that I feel are helping to make the world a little bit better in a variety of different ways. Here at AV, I've now invested in dozens of different companies, both at seed stage and at some later stages. A few notable ones include Boundless, which is now the market leader in digital immigration services within the US market. I've also been in Hydro, a leading company in the connected fitness space, specifically in the rowing, and also in a fintech in the buy now, pay later space called Sunbit, which has also become a unicorn since we initially invested. Just a few out of many examples of what I've done here at Alumni Ventures. But we're not really here to talk about me, so we'll move on from that. So Alumni Ventures was founded in 2014 to offer individuals the opportunity to own a smart, simple venture capital portfolio, and you might say democratizing venture capital as an asset. We've now introduced thousands, I believe over 11,000 investors to venture capital, many of whom have never invested in the asset class before, simply by making it more accessible. As I said in my introduction, traditionally, you would need to be kind of a large institutional investor, an endowment, a pension fund, something like that, in order just to gain access, and let alone need checks that are often in 7 or sometimes even 8 figures to get access to some of the world's leading venture capital funds. We try to get around that by providing individuals with access to the same deals that those incredible VC firms are participating in, but by doing it by working with individual accredited investors. And our minimum now is only $10,000 to access one of our funds. We have raised $1.4 billion to date from those 11,000 individuals, and we have invested into over 1,500 different companies, which makes us one of the most active venture capital firms globally by almost any measure. We have about 120 employees located across our 5 offices around the country. About 40 of us are full-time on the investing side. A little more on us. We're not only known for our volume of deals, quantity is important, but more importantly is the quality of the deals that we're doing. CB Insights, a leading market research firm, referred to us as one of the top 20 venture capital firms in North America, and we are the only firm on that list that specifically works with individual investors. We've also been named one of the most innovative companies by Fast Company and one of the fastest growing companies by Inc., among many other accolades. I think it really speaks to our community, our engagement, the fact that we are kind of unique among venture firms, work with such a broad community of folks that are not only investors with us and founders with us, but are also a network of experts and other folks that we tap to be helpful and create this vast community. We've also published quite extensively content, both written and webinars such as this, where we share our ideas, thoughts on venture capital, on startups, on innovation, technology. We publish a list of what we feel are our top companies, such as our Apex 50 list. So really trying to actively engage with folks that are interested in being part of the venture capital ecosystem in one way or another. As I said, our model is about co-investment. So we don't lead investments, we don't take board seats, and that basically allows us to focus on getting access as a co-investor to the best deals that are out there. We have co-invested alongside the biggest name investors in venture capital, from the Andreessens and Sequoias of the world to the Bessemers, Y Combinators. I just attended Y Combinator Demo Day and met with many other leading VCs and top startups there, Khosla Ventures, NEA, et cetera, et cetera. We are alongside almost all of the major venture capital firms that you could think of, particularly in North America. And that's really our model, to get our individual investors access to the same great deals that they might not otherwise be able to access. And we do that by not just working with other VC firms as partners and co-investors, but accessing through our relationships with terrific founders that we've developed. Yeah, let's talk a little bit about seed investing. This is really where bold ideas get nurtured at the earliest stages. There are different terms for this: pre-seed, seed. We can sort of bucket it together a little bit for the purpose of this conversation. But this is high risk, high reward investing. There's no doubt about it. Startups will not all go on to greatness, but you know, what we look for are opportunities that have significant upside. We look for trends in the market. We look for terrific founders that are deeply experienced and knowledgeable. But we also believe in diversification. Concept in this business is the power law, which basically says you need to place many bets on promising young companies in order to find a few that are going to have outsized returns. And potentially return what we say could be the entire fund out of one deal, out of many. So we look for the opportunities that have the potential to become very big. You might call them moonshots, but companies where there's an opportunity to address a large market, where there's some interesting, compelling technology and vision of the founding team, and where we think if things do go well, this could really become something quite big. Those are the opportunities we like to invest in now at the seed stage, where valuations are very low and the opportunities for those significant returns are quite appealing. So yeah, a few more basics on investing. There are different stages of fundraising. If you are a founder or know a founder, they might start out by raising, you know, what's first sort of a friends and family round. That can sometimes be a hybrid with what we call a pre-seed. Pre-seed is usually still on the ideation stage. There's an initial hypothesis about a problem to solve, an idea about how one might solve it, and some initial product development that gets built out, and maybe some first test or pilot customers. That then progresses to the seed stage, which is usually where a company starts thinking about a go-to-market. Now, obviously, it depends on what industry you're in. There are some deep tech, life sciences companies that might still be in the R&D phase at seed. But in general, for many companies, such as in software or consumer, they're kind of going to market initially at the seed stage. Series A is about really making sure that you have that product market fit and that you can start driving a repeatable sales process. It's about building that first sign of scalability that we can grow maybe beyond a first market, whereas Series B, C, and beyond is really about taking that initial success and building out a viable market that will absolutely grow across many sectors, many geographies, and the economic model becomes more apparent that this business can really be profitable and sustainable and potentially go on to either an IPO or potentially a big M&A type of exit. So, many technology companies, we'll talk about more about this, really just start from this very early pre-seed and seed. Every company starts from somewhere, and a lot of the biggest names in technology today just got their start as an idea in the garage, either a metaphorical or a literal garage, and developed from there with great attention from the founders and great supporters along the way, including hopefully some strong partners such as some of the VC firms that get in early on. So as we evaluate seed stage startups, when we look at deals, we kind of have a checklist we use. We use a scorecard methodology. We're looking for that founder DNA, the passion, the expertise, resilience, and really lean into founders that have either been in startups before or have great knowledge of the industry that they're addressing and have shown the ability not just to have technical knowledge, but also build a team, build a culture. That's very important too. We love these large addressable markets that are usually in the billions of dollars. If things go well, really addressing a big problem in a big market. A differentiated solution, something that's new, that's novel, unique, something that can also be defensible, once there's either some IP, whether it's patents or whether it's some sort of go-to-market or customer differentiation and protection, that can be great as well. Sometimes it's working with certain partners that gives you a moat and a leg up in a market, and some early signs of traction or validation, depending on what stage of seed it might be. We do look to see, what have they been able to prove so far through a go-to-market strategy. We're kind of looking sort of across the board at all the pieces that make something work. Not every deal at the seed stage has everything fully baked. We certainly understand that, but we do look sort of among this pool of different attributes. Are there signs that this thing could grow and become big, and do they have the right team to execute on it? So it's very important to see this path to scalability. We look for the resourcefulness of the founders is one big important thing. How much of a team are they building around them? Other co-founders, advisors, other investors? How do we know that this is a good market? So we look to check the market, who else is there from a competitive standpoint, potentially partners, and we look for what moats could be developed. Sometimes at these very early stages they don't have these moats yet, but we want to know what the plan is to get there, because ultimately that's what's going to make this company stand out. Once others catch on that they've identified a great opportunity, how do they protect themselves as a market leader? So we're really looking for some validation from the founders, from other investors in the deal, to see how they think about it, and sort of looking across the broad market to really understand what the scalability potential is of this company. So there are different types of seed investors. You might hear as you're doing research, different words being thrown around. There are angel investors. This is typically individuals that like to invest in very early stages in companies to get these big outsized returns. There are angel groups that get together and collectively make investments as well. There are seed funds. There are funds that specifically focus on seed investing. I lead the seed fund within Alumni Ventures. While Alumni Ventures is a multi-stage firm, this particular fund focuses on pre-seed and seed for investors that really want to get in at the earliest stages. There are other venture capital firms that are multi-stage funds that intentionally invest across seed, Series A, Series B, and even later, in order to have the benefit of diversification. From investing at multiple stages, you do de-risk a little bit as you invest at later stages, although obviously valuations tend to go up, so there might be less return potential. So it's a bit of a balance, and some investors like to have a little bit more diversified approach to that. You also hear about accelerators and incubators. You might have heard about Y Combinator, Techstars. There are others, some are regional, like Mass Challenge, that help early stage founders really get their ideas sort of vetted and off the ground. So lots of different folks who play a role within sort of the startup and venture ecosystem. So we, as we started to mention, there are best practices for seed stage investing. We do believe that diversification is essential. I think from personal experience, I've also done some personal angel investing, and I know that having a diversified portfolio makes a lot of sense, is very important. One, because a lot of startups at the early stages will not go on to succeed, but also sectors can go in and out of favor. So, you know, a personal investor might have a strong network within one particular area, such as fintech or cybersecurity or life sciences. But things go in waves, and having a well-diversified venture portfolio can be very valuable as well to generating the highest possible returns. That said, it's important to have a clear thesis on what you want to do. There are funds that focus on particular sectors, and that's great too if that aligns with a vision. At Alumni Ventures, we do offer funds that are focused on some specific sectors as well, and that can make sense. You know, if you have a strong thesis and deep knowledge within a particular space and want to focus on that can work very well too. Very important to vet deals thoroughly. Evaluating founders is extremely important. Identifying the market potential, the product differentiation, really having that deep sector knowledge is really important. For us, we need to build relationships with founders. Many people ask, do we get our deals through other VCs? That does happen, but at the end of the day, on every deal we do, we need to form a relationship with the founder, and they need to understand why we would make a helpful and valuable investor for them. And we like to kind of get to know them, and if things continue to go well, you know, invest more money in their companies as things move along. It's very important to monitor and support these companies. We want to obviously know how well they're doing. Should we be potentially investing follow-on capital into the companies that are doing well? That's very important for venture returns too. Within the seed fund, we do reserve some of our capital for follow-ons into the successful companies that we have as we get to see how they perform. And we need to see how we can be helpful. We do have a platform team, which we call CEO Services, that within Alumni Ventures that's here to be helpful, make introductions and serve our portfolio companies in a whole variety of different ways. We got to keep adapting to the investment spectrum as we see companies that are very, very early pre-seed and others that are more maybe maturing more into the later seed stage, and we look across all of those within the mandate of the seed fund. And it's important to be patient as well. Not invest into everything that crosses our desk. We wouldn't be able to keep up with that, but really maintain a vision on what we look for and what sort of qualifies as a great seed opportunity. And then think toward the future. How does the company eventually exit? It might be 5, 10, 15 years down the road, but eventually a company should be able to be acquired or go public. There is a more liquid market now for secondary sales as well into private companies. So just start thinking about how we eventually will get our money back, because every venture investor will eventually need capital returned at some point. A little more on some of our deals that we do. We think we have a real hidden edge to identifying great deals. A deal we did quite recently, Trilo Bio, is in the bio lab automation space. A very interesting company that is going to revolutionize this industry and just make it much more efficient through the use of AI robotics. We participated in a seed round led by Initialize Capital, which is a phenomenal Silicon Valley-based fund. We got access to the deal through another Boston-based VC, Argon Ventures, that is also an investor in this company, and because of our relationships with other VCs such as this, that got us a leg in to participate in a highly oversubscribed round that we were excited to gain access to. Another deal, we can go to the next one. LinCode is one that we were excited to get into, where we invested alongside Excel, one of the storied venture capital firms, which uses AI in machine vision technology. So quality inspection and manufacturing. Originally, the go-to-market was working with OEMs and auto and other tier 1 and tier 2 suppliers. So very important for picking up on quality errors that the human eye cannot necessarily detect. and some really groundbreaking technology. We're excited to participate. We've invested twice now into this company, and this was referred to us through one of our angel partners. So we've developed a super angel partner program where we work with experienced, active, and deeply knowledgeable angel investors who share deals that they themselves are investing in. And this was a big win as this came to us through one of these angel partners that we have. So just more on how we use our network to gain access to deals. Next one. So I did mention, we need to be fully transparent that there are risks to startup investing. Most venture-backed startups do not end up returning their capital to investors, but the ones that do, of course, generate such outsized returns that it makes up for the ones that do not return. So I think one of the things that's important to mention as a seed investor is it takes some patience and you could say intestinal fortitude to know that in the early years, you're going to probably see some failures. But that doesn't mean that your investment is failing, because the big winners tend to get those big returns in the later years. So you might have to wait till year 7 or 10 or something like that before you actually recognize these big returns. So it's a little bit hard to, it's not like looking at your stocks, which move on a day-to-day basis. This takes years. Failures are to be expected. But the big winners are going to come in the later years, and that is what has happened and been proven to happen over years and decades of venture capital. So there are a lot of reasons why startups fail. They don't find product market fit, execution and operational issues, all these things that one might expect can contribute to that. But that's part of venture investing. If you want the outsized returns, there is this risk that is entailed, and it does take time, of course, for these returns to be fully recognized. Some of the recent trends we're seeing, there are more and more specialized seed funds coming into the market. We think it's important, of course, to invest alongside experienced investors that have track records. That's why we have our co-investment model that we've been using, and has been proven, very valuable for the model that we have here at Alumni Ventures. Valuations, have kept increasing on seed stage. I think over the last couple of years, things sort of puttered out a little bit, but things seem to be returning in terms of the valuations. We're seeing more happening internationally in terms of venture ecosystems developing across the world. Obviously, a lot of activity has been seen in Europe, and certainly Israel has a well-developed venture ecosystem. But really across the world now, we see activity in Africa, the Middle East. I've been in conferences recently from Hong Kong to Europe to Asia and Hong Kong, and have seen quite a proliferation of venture development really across the globe. We do invest globally. If we can find terrific opportunities outside the US, we will certainly do that, and we have done many investments internationally. Lots of syndicates. People are putting together their own syndicates through platforms like AngelList to bring their friends or others together to invest in deals that they vet. I think that's great. I think the more investment activity there is, the better for everybody, to support tremendous founders with brilliant ideas. But one thing you get with Alumni Ventures is a well-diversified, professionally managed investment portfolio. And I think that's sort of what makes us stand out from, for example, going to necessarily an AngelList syndicate that you might find. So, we have founders that are really embedded in our communities now. We think it's really important. This is our value, our network. And so one example, Tony Xu from Parker, a real estate investment platform that's developed. We are investors, and Tony has attended some of our events and has tapped into our expert community and has shared a lot of thoughts about how we, even though we're not a lead investor or a board member, are still adding a lot of value and helping him, as he's even been able to come and work in our offices, for example. So we really try to leverage everything we have as an investor to try and help our portfolio founders. we can go to another quick one. Billables is another one in the legal tech space where we've also been able to introduce the founder to experts to talk with other lawyers, for example, and some of those expert conversations have actually led to customer contracts, and we think that's terrific when we can be a matchmaker and help members of our community connect and find reward in that. We are very excited to do that, and we do things like that every single day. Rawazi is another company in the data and analytics space where we've also been able to help get the founder connected. We made a great connection with Morgan Stanley that's added a lot of value for them, and they're very proud to share about that. And we love it when founders can tell stories like this because that's what helps build our brand and helps us get access to other founders of companies that we want to invest in. A couple other examples from the portfolio, a couple seed investments that we've made at AV that have had really amazing returns so far. TRM is in the blockchain space, compliance tools. We invested alongside Bessemer, among others, and we now have a 34x kind of return. It's on paper at this point, before a company goes public, but we are able to monitor their progress, and as companies raise subsequent funding rounds, we're able to see how they're doing, and this is an amazing success story. Another one is Sleeper in the fantasy sports games space, where we also have more than a 30x return so far based on our initial investment. So, keep in mind, great value is created in the earliest stages of investing. If you look at 10 of the most, or the 10 most valuable companies in the world, at least at the particular date and time that we have here, 7 out of the 10 initially started as venture-backed companies, and they're all names that you know well, from the Microsofts, Apples, and Metas to more recent, explosions that you've seen from companies like NVIDIA in the AI chip space. So, VC plays a very, very important role in the broader economy and creating value into companies that eventually lead in the stock market and the public equities realm. So a little more on my team here at Alumni Ventures. So I lead the team as managing partner. I'm based in our Boston office. We also have Mira Oak, who's in our Menlo Park office in Silicon Valley, another very experienced venture investor. Jason Bird has been with our team for several years now with me in Boston. We actually have someone new on our team as well now in New York. And we have a whole network of others that help us. Those include actually we have some terrific interns that are some young blood on our team to keep ideas fresh, as well as some venture fellows, some professionals that work with us who do this on the side and are located kind of in different locations and are spotting opportunities for us, as well as our network of that I mentioned, super angels. We have scouts, we have experts in our community that help us evaluate and source deals. So we really bring this community that's very hard for an individual to put together. We've been at it for a number of years now and have a full team that's actively looking to invest into the best possible deals that we can find and build unique value for these companies. Many of our investors that have been with us for a while really appreciate what we do and see the unique value in it. So a couple of testimonials, I won't read every word of them for you, but just know that there are lots of investors who joined us, found us, have been with us now for some time, who are very happy about both the returns that we generate as well as how we communicate with them. As an investor, you do get access to an investor portal, so you're always informed about what companies are in your portfolio, how they're doing, and we have a full team here on our end that's always available to talk or email or answer any questions that you may have. It's very important for us to maintain strong relationships with not just the other VCs and other founders, but most importantly with our investors, because all of this we do for you. So yeah, I think we can just talk a little bit there. Just to mention, there are different types of investors out there that we work with, and just important so you know you're not alone. And if you're kind of new to this, we do have investors that come to us because they're really interested in being on the forefront of technology and innovation, and they're enthusiasts and they want to, play a role in investing in the future of technology and the economy. There are others that join us who've maybe never done venture before, but they're interested in perhaps learning about what venture capital is all about, and by joining us, they get access to more information and really start to learn by having a portal and having access to all the content we develop, and are using this as partially a way to learn. Legacy builders who are very much return focused, who want to build a venture portfolio for their family and want their investments to play a role in developing a better future for the world. There are others that investors that are really seeking big opportunities. We call them trophy hunters. They know that only through investing in very early stages are they going to be able to get in early on the next great companies and big brands that are going to change the world. And there are others who are simply looking at this very strategically as an investor, and they want a diversified portfolio, and that might go beyond traditional stocks or bonds and include, maybe for some it's real estate, but for others they want to diversify beyond that into what we call alternative assets. And venture capital, we feel, is one of the most exciting and fastest growing opportunities to get into another asset class. So we'd like to be your venture partner, and we're here to help. More than welcome to reach out. This is our QR code. You can always find us through our website, av.vc. And I wanted to also use this opportunity just to address a few questions that we've received that I will take a look at here because there are a number of questions that frequently come up. So let me just cover this quickly. I just have a few questions that I'll go through. How does Alumni Ventures determine which lead VCs to follow when co-investing? And have you ever declined opportunities led by prominent firms because your diligence revealed concerns that they may have overlooked? Yes, so that's a really important question because our model is contingent upon co-investing alongside great VCs. We do follow the track record of other venture firms. There is quite a lot of information that's available to us, some of them that we get through subscription services that we pay for to gain access to which companies different VC firms are investing in, and we actually know when certain VCs have invested, and so you start to understand why certain VCs have built a name for themselves because you can see it in their track record. And so we have a good idea of which firms have had the most success investing. Some are generalist investors, others are more sector or stage focused. And we take a look at that on every deal that we do to kind of understand the track record, not just of the firm, but also of the lead investor that's doing the deal, to know how relevant it is in this case, and to know what their expertise is and what record they have had investing in the past. So that's very important for us, but that's not the only criterion that we have. So the who else is in the round, who's leading the round, is not enough. That I won't invest in a deal just simply based on knowing that one of the top name VCs is investing. That's very important to us, but it's not the only factor. And yes, I have personally passed on deals from that have been led by some of the biggest name VC firms in the world, where it would seem like it would be an automatic, but because something in the round dynamics or the company, we feel like things are maybe not going as well as hoped, that will give us pause. I mean, even the best firms in this business do not have 100% track record of investing success, and we need to be aware of that. We often, in fact, usually we'll talk to the lead investors on deals to understand how they think about it. And I've even talked to lead investors on deals who have provided caution, who've warned me maybe not to invest in a deal because there were things going on behind the scenes that I wasn't privy to, the founder didn't necessarily make us aware of. So it's very important for us to look on every deal case by case, and there's never an absolute yes or no simply based on who the lead investor is. The next question, can I invest through an IRA? Yes, that is possible. Using self-directed retirement funds is possible. There is another platform that we use as a third party to help enable that, and you're welcome to talk to our investor relations team to understand how to do that, but it's very simple, and many of our investors do invest with IRA funds. Third question, how has the rise of AI and automation tools changed your due diligence process compared to 5 years ago? And are there aspects of evaluation that you believe technology will never replace? Yeah, absolutely, it is changing our process. We use AI tools now in many ways. I think we're one of the funds that's on the forefront of using AI in our own work. We use that to source deals. We use it to evaluate deals. We use it to evaluate, for example, legal documents that we go through on every deal that we do. So there's quite a few tools and a lot of automation that we're bringing to our process. But are there aspects that technology will not replace? Well, I don't believe technology will ever replace in real life relationships and the kinds of communications that we build with founders, with other investors. I don't see any kind of AI tool or robot replacing human connectivity, and that's a value that we bring as experienced investors, and I don't see that going away. You could have an AI tool today, go out to the internet and find 1,000 startups that might be raising money, and yes, you will find companies, but that doesn't speak to the quality, nor does that speak to the ability to actually get access to highly oversubscribed deals. I sometimes say that we're kind of like Groucho Marx, who said he doesn't want to be a part of any club who would have someone like him as a member. We sometimes feel a bit like that with venture investing, that we want to get into the deals that we have to fight our way into, the highly competitive and oversubscribed rounds where we need to convince the founders to take our money. And that really requires a person at the end of the day. So just 2 more questions before I wrap up. How do you approach founder relationships differently from other VCs, and what post-investment support has created the most meaningful impact for your portfolio companies? Yes, so as I mentioned, we don't take board seats, which is a way that typically a lead investor might get involved with a company, but we're here to be sort of a supportive aunt or uncle, you could say, where we want to ask the founders, how can we help? We have this huge network. We have something like 700,000 people that are opted into our community, of which I think 8,000 or more are part of our expert community specifically. Some of them are our investors and some of them are not. And we can connect, and we do that every day. And we have a full-time dedicated team. They're based in our New York office, but they help our companies around the world with introductions, with practice pitches, with creating and distributing content, with letting you use our office space, with hosting events, with connecting our founders and finding synergy. So I think it's really a unique platform that we've developed to work with our portfolio companies, and we have a dedicated team that's always available to help and respond practically in real time to the requests that we get. And we think this is a unique offering and something that complements what other lead investors, for example, might do to be helpful on a board level. So lastly, looking at your successful investments like, so take TRM or Sleeper that I mentioned before, what non-obvious indicators were present at the seed stage that predicted their success and most investors might have missed? And there's never any one real secret sauce to this. I think there is a matter of some luck and serendipity that always plays in. But at the end of the day, it's really about execution. And execution matters even if you don't maybe have product market fit as you thought you might. And it's that ability to be agile and adapt. And so we're looking for founders that just have that grind in them, that are going to get through it and have a desire to win at all costs. So even if they come up with roadblocks along the way, they don't have that initial product market fit, or customers are not onboarded early, they keep going and going and going, because that's really what it takes. It's that perseverance. So we look for founders that have shown evidence that they can grind, they can hustle, they're really smart, but they're also good at working with people, building a culture, a team, finding customers, and finding that market, whatever they need to do to get there. So I think there is a little bit of judgment that we take just as experienced investor, having had a lot of reps at this and seeing deals that have worked and deals that haven't. You start to get a feel for types of personalities and from interactions with founders on what will they do when things don't necessarily go in a linear path to success, because they most often do not work that way. It takes some speed bumps along the way, but it's that ability to overcome them. And so really execution is all about the people, and that's what we're always looking for. So thank you. Just wrap up again. Appreciate you taking the time to join us today. I hope this has been informative. Please reach out. Feel free to reach out to me personally. Use LinkedIn, for example, and I'm happy to address any other questions. If you're interested in joining us, we have a terrific investor relations and community team here that's here to work with you and support you on your journey into venture capital. And wish you much success in hopefully getting your questions answered, and hope to meet you all at some point along the way. Thank you again.